Hello, and welcome to our RKL webinar series, Coronavirus and its Impact on People, Process, and Profits. Before we start today's call, we would like to share a couple of housekeeping items. This webinar is being recorded. We will provide you a link to the recording when it is available via email. All materials were emailed to all registrants around 10:15 a.m. If you registered for this call after 10:15 a.m., you can find the materials on RKL's Coronavirus Employer Resource Center at rklcpa.com. All lines are muted and will remain muted during the webinar. If you have questions to ask during the webinar, use the Q&A button at the bottom of your screen. Additionally, questions can be sent to info@rklcpa.com. 1 hour of CPE in the field of business law will be issued for participants of this call. To receive your CPE, participants must be connected to the session, both audio and presentation, for its entirety. Additionally, participants must answer all questions and elements of engagement. Elements of engagement will be through the poll feature. If you're viewing through a web browser, ensure that you have pop-ups enabled. Additionally, if you're using multiple monitors, the poll may appear on your second screen. At this time, I would like to turn the presentation over to Eric Wenger, who will introduce our team for today's webinar. Eric, the virtual floor is yours.
Well, good morning, and thank you, Adam, for that introduction. Welcome back to so many. It looks like at this moment we have 613 people, and the number changes continually. So thank you for joining us. I know many of you appear to have been with us last week, and so welcome back. And for those of you that this is your first webinar with us, welcome, and we look forward to sharing hopefully some really relevant information here with you today. Just like to share a little bit on our home scene, what's going on the home front. It was funny this morning, we were standing in the kitchen, and I said, what day is this? If you're anything like me, I feel like I've just sort of lost track of time. The days just sort of blur together as we are out of our normal routines. And it's like, how long has this been going on? And it's funny, how do you define what's been going on, right? But the significant change in our lives, and our oldest son, Josh, his comment was, well, everything changed the night of Wednesday, March 11th, when the NBA suspended, and that was the last game that he was able to watch. He's a huge sports buff, so he was not pleased, and that's his marker. My wife said, well, no, it was really 2 days later when the Governor Wolf closed the schools, and all of a sudden everything changed from that standpoint. And I would say for me personally, where it really started to feel different was the following Tuesday on March 17th, when that was our last day in the offices at RKL, and we've been working remotely ever since. So, and we're doing today's webinar obviously remotely, and so thank you for bearing with us with our technology and the changes that we're trying to get relayed to you folks today. Adam did mention at the top that we are not going to be doing live chat or live Q&A. If you do have a question, you can submit that in the question box if there's any sort of issue. And the reason for that is simply we have such a large group here that it's going to be unwieldy to try to manage Q&A throughout. The other thing I would say is please check out the rklcpa.com website. We have the COVID-19 Resource Center, and we've been building and continue to add resources as things change by the day and by the hour. So I would start there as a recommendation for where to get some answers. Secondarily, go to your engagement team. Reach out to your partner or anyone on your team and let them know what's on your mind, and we'll certainly try to get whatever assistance that we can and guidance. And also keep in mind, we are in an environment right now where the law is changing fast. There's a lot of regulations that are not released. There's a lot of ambiguity. And so many of the questions that are coming up, unfortunately, we don't have great answers for, but we'll do our best to let you know what we do know. So with that, I would say, just in terms of goals for today, I think it's important for everybody on the call to realize, and at the moment we're at 682 people, that you're not alone in this. There's a lot of people that are trying to figure out what is going on in the world right now, and how do I, as a business owner or a business leader, navigate those waters. And so our effort and our goal here is to help you sort through the information. It seems like every few minutes, there's a new news article or a new release from some organization saying, here's what you need to know. And our goal here today is to try to sort of distill what we believe is really important and share that with you guys. And when I say up to the minute, we are literally making slide changes. We were making slide changes this morning, and we'll talk about what that looks like. So let me jump ahead here to our slides and talk about what's coming up here today. So outline for today's presentation, first we're going to talk a little bit about cash and crisis management, which is sort of in the forefront of everyone's mind. We're going to spend quite a bit of time on the CARES Act, HR 748, and talk about what's in that. That is what the Senate passed on Wednesday, and the House is literally debating even as we speak. Then we will have Robin join us to talk about implementation of the Families First Act. You'll recall last week we spent time talking about some of what was in that, and now companies are grappling with how do I actually implement that, both from a tax standpoint, and then Stephane Smith will talk about that same act in regards to some HR matters and how that's being addressed from an HR side. Let's start on this graphic at the 12 o'clock position on the clock here. Obviously, what's going on right now is there's a lot of uncertainty about how long does this pandemic last, what are the implications in health, in safety, in the economy, and that has just sort of frozen up cash. Everybody's rushing to hold on to cash or collect cash because of that uncertainty. And so, that's sort of the baseline. And then there's been all these regulations and new laws that are coming out, and there's all sorts of information flying at us. So in the midst of this chaos, how do we implement, how do we understand, what's required of us? What are the goodies, so to speak, within this legislation, and what are some of the things that could actually be some additional headaches? Certainly the supply and demand chains have been thoroughly disrupted in many businesses. And we'll talk some more about that as well. The workforce, what do I do with my people? Are they working remotely? Can they work? Has the governor closed my business? Do I keep paying them? Do I lay them off? Do I furlough them? And we'll talk about that as well. And then, moving up to the 11 o'clock spot on this graphic, working capital, cash, and cost minimization are the priorities. And loss recovery, what's that mean? That's, is there an insurance collection opportunity? Is there a bankruptcy scenario that we need to contemplate? This next slide talks about what many of our clients are going through right now, and that is trying to build out a tactical team to deal with what I'll say is a crisis. Everybody says it's a crisis. I think that's a fair assessment. First of all, that team is C-suite folks as well as some of your advisors to say, how are we dissecting this? How are we going about moving? And on the cash flow side, some real attention is being paid toward forecasting of cash flows, daily monitoring of cash flows, and thinking about what does that mean as it relates to my operation, my production, my procurement, my distribution, my sales. And then you think about, well, this is all just for the imminent. This is for tomorrow or for next week. But what about, mid-range and long-term? How is this going to change my business? How do we, potentially retool? How do we move out of certain areas, move into certain areas? The saying is there's opportunity in chaos. People need to survive through this, obviously, in order to have that opportunity. And so how do we position on those long-term strategies as well? And just being very flexible in communication around the implementation of this, in communication with our lenders, with our vendors, with our lessors of real estate, with our employee base. There's so many different aspects of the entire business that are having to be dealt with simultaneously. And so, again, this is sort of a high-level view of what many companies are approaching right now. And let me see if I can, there we go. The liquidity issues. So just diving a little bit deeper here on the cash side, we talked about cash forecasting. That's something that if your business isn't doing that already, you're going to need to start doing that more than likely, unless you have a bottomless pit of financial strength. A lot of companies are saying, how long, what is our burn rate? How long can we go? What happens under various scenarios? Our debt and our obligations. So those could be debts, something as simple as accounts payable to debts with outside lenders, banks, various covenants that need to be, maintained with the bank. And what kind of communications are you having or starting with your lenders to ensure that, they're understanding what's going on inside your business and that you're in communication around what sort of needs you may have as a company that says, realistically, we don't have the cash flow to be able to supply or to support all the all the things that need our cash. Workforce management, we mentioned this one, but just, how do we manage the personnel side and the labor costs associated with our business? Many companies are seeing significant changes in their sales. Some companies, a few companies, depending what business they're in, could be doing really well right now. But many companies are finding themselves in a spot where demand is not there. The industries, you think about hospitality, about entertainment, about restaurants, food service, educational services. I mean, there's a lot of different areas where things are really tight and difficult at the moment. Looking at receivables, looking at inventory, and what we'll try to talk some more about here, the economic and tax incentives as well. Last week, Ryan Hurst, one of our partners in our consulting group, shared a slide that looked very similar to this, and this slide has been updated with red text. The red text is what has changed since last Friday's webinar, and where I'd like to spend the time primarily is the program that's getting the most focus at the state level, which is on the right of the slide, PETA. PETA stands for the PA Industrial Development Authority. It's a group underneath the Department of Community and Economic Development, and they have some working capital assistance funds that are available up to $100,000. There's criteria required for that. You must be less than 100 full-time employees at the time of your submission. It's actually a 0% loan rate, so obviously very attractive in terms of its cost. It's a 3-year term. The first year, there's no payments required. Second year, there's a modest amount of payment, and the third year, there's actually a balloon payment, which becomes due. If you think about this in terms of the full, assuming that a company were to borrow the full $100,000, the way that math works out, you pay nothing in months 1 through 12. The next year, the next 2 years, actually, you're going to pay about $700 a month, and then all of a sudden at month 36, you're going to be owing $83,333. So a big chunk at that balloon. So just keeping in mind that dynamic, and also realizing that if this is the last gasp for a company to say, okay, this is our last opportunity here, you may want to be a little bit careful with that because there are personal guarantees required with this lending from PETA. I have Ryan's email address down there at the bottom right. If you have some questions on that, certainly check in with Ryan. We're going to move to a polling question now. And let me go back there. If Adam, you'd like to bring up our polling question, we will have 3 polling questions throughout our webinar this morning. You do need to participate in all 3 in order to receive CPE credit. So Adam, I'm not seeing that on my screen just yet. There it is. Hopefully all of you can see that now. Question 1, what's your biggest work from home challenge? And the options there, staying connected with coworkers, staying focused amid other distractions, finding time to take a break, or I'm not currently working from home. Certainly we have some companies and some clients that are considered life-sustaining businesses, and for those companies, many of them are continuing to do their thing as best as they're able, and we appreciate that, especially the medical profession these days. So again, polling questions up on the screen right now, folks. If you could please respond to that. We're going to move on here in just a moment.
And again, as I alluded to at the beginning of the call, the polling question, if you're using a second monitor, it may pop up on the second monitor. If you're using the web browser, it might pop up on the corners or the sides. You might need to drag it into your main screen. But the polling question is visible, and as of right now, we've got a whopping 77% of our audience have voted already. We'll keep it open for about another minute just so that number goes up a little bit more.
Adam, can I move forward onto the next slide while this is up?
It's still going to show. Yep, if you don't mind. If it's not going to.
Yeah, please go ahead. Yeah, we'll keep the question up, but let's go on to the next slide if that's an option.
Okay. You should still have the. Let me just mute real quick, and then you have virtual control back in a moment.
Okay, there we go. All right, so what I'd like to talk about now, and I'm just going to move this over to the side. If you guys want to keep voting, we'll close that. Adam will close that in a second. We're going to get into the CARES Act. The CARES Act stands for the Coronavirus Aid, Relief, and Economic Security Act. They always come up with these cool acronyms in Congress, right? So first of all, this is the $2.2 trillion legislation that's being debated in the House as we speak. It's the most expensive legislation ever. If you remember the TARP bailout, that was about $700 billion in October of 2008. So we're talking a legislation package which is 3 times bigger. Last week, you may recall we talked about the first act, the second act, and this now being the third act. The Family's First Act was the second act. This is our third act in terms of money being thrown at the economy. It did pass the Senate late on Wednesday evening with a vote of 96-0, and the House is at this moment discussing it. The intent is that the House will have debate for 3 hours this morning, ending around noon or 12:30, and then they'll have a voice vote. And what that basically means is that this is extraordinarily likely to pass. If one of the legislators objected to a voice vote, it could be a little interesting, but it appears very likely that this is going to become approved by the House today and likely signed by the president, perhaps even this evening. Adam, if you want to close out that polling question, we'll move on to the next slide here. This is one that's gotten a lot of headlines. The recovery rebate, and this has goodies in it for, okay, we're fighting for slides, sorry. I'm going to go back to the beginning of this. Okay, we're going to go back to the recovery rebate. This is the one that's sending out checks to all Americans, not all, but most, and we'll talk about that here. If you're single, $1,200, $2,400 for a married couple, plus $500 for every child under age 17. Here's a caveat there. Those claimed as a dependent on another's tax return will not get a payment. So think about the high school senior or the early in college student who may still be claimed as a dependent. They would not be eligible, but those under 17 would. And you can see the 1,224 and 500 are the relevant figures. It is not requiring any amount of tax liability. So you get this credit regardless of how much tax liability you have in 2020. And there's no required minimum level of earnings. It's going to be based on, there are some income requirements that will be based on your 2018 or 2019 return, whichever one is most recently in the records. I don't know what the cutoff date will be that Treasury uses for this, but there is a true-up mechanism, which we'll talk about here in just a minute. If you look at this graph, this is published by the Tax Foundation, gives you a good visual on the phase-out aspect of this credit. So coming out here to the right, anybody that's above about, in this scenario, married with 2 children, once you're out to $218,000, there is no credit. If you're single, the threshold meaning where it starts to phase out, AGI between 75 and 99,000, you will get phased out. Married with no children, your phase out occurs between 150 and 198. So that gives you an idea of, eligibility wise, where would I fall on that graph? Again, based on your most recently filed tax return. It will be paid electronically. It's supposed to be done ASAP, and realistically what that likely means is either April or May. It's only a one-time payment, at least what we know at this point. There's no multiple months of payments. It's a single payment. It's considered an advance payment on a credit that you are going to recompute on your 2020 personal taxes. So what that means is if when you actually do your 2020 taxes, say that your income is down in 2020, which chances are that's probably the case for a lot of taxpayers. If your 2020 income is lower and that makes you eligible for the credit or a higher amount of credit, you will get that on your 1040 when you file next year. Interestingly, if you end up getting a check based on your most recent filed return and you're eligible for that amount, but when you actually do your 2020 return, it finds that you shouldn't have gotten that much money. The way it's written currently, you're allowed to keep it. And so we'll see if Treasury puts out any guidance around that, but I believe the intent there is that you get to retain your credit, even if it's quote unquote overpaid. This next section is really a big deal. And so encourage you to pay attention if you haven't so far. This is called the Paycheck Protection Program. PPP is the acronym. And it's related to paycheck protection loans. What is this? Well, first of all, it costs $349 billion. It's a huge part of this package. What's the relevant points here? It applies to businesses with 500 or fewer employees. That's a critical consideration, 500 or fewer, also including nonprofits and sole proprietorships. The only exception that is written into this law is that if your NIAX code, your NAICS code starts with 7.2, and what that means is you're in the accommodations and food services business, you're eligible if you have no more than 500 employees per location. So here we're talking about hotels, maybe restaurants or chains of restaurants. Unless you fall within that industry, and you can see they have a targeted relief for that industry, unless you fall there, you're not going to be eligible for this based on that 500 count. There's still a lot of clarity required to determine exactly how is that 500 employee head count determined. So stay tuned on that if you're on the bubble. The borrowers basically need to say that, hey, we want to, and by the way, I should preface this to tell you where we're headed. It's called a loan. The reason it costs $349 billion is because there's a very high probability that some or all of that loan will actually be forgiven by the US government and not required to be paid back. So everybody likes this, right? Like, how do I take advantage of it? And I think there's going to be a massive amount of interest because most companies are going to be able to meet this requirement right here, which says that I need to make a good faith certification that coronavirus has impacted my business and it's difficult to make, basically pay my bills. And that could be staffing challenges, decrease in sales, or customers, closures, supply chain. I mean, there's a whole bunch of reasons that, at least could make the case for that. These loans are fully guaranteed by the federal government, and they will be issued by local banks. As far as priority, my big question in this is how quickly is that pool of money going to go dry? Because again, so many companies potentially could be eligible. The law does outline these various criteria as far as prioritization. So if you're in an underserved area, if you're in a rural market, if you're a veteran or military, minority-owned, women-owned, a business that's new, more or less a startup company that's not even been around for 2 years, and now all of a sudden this has come, those folks may end up getting priority. Exactly how and what the process is, I don't know. At this point, nobody can apply for this. Technically, this hasn't even been signed by the president. It probably will be later today, I suspect. But there's a lot of questions around, what kind of demand, huge demand likely. So how does this actually work? How much can you get? It's the lesser of $10 million or 2.5 months of payroll costs based on the 12 months prior to the date that you request this loan. What's payroll costs? That includes a lot of stuff: wages, commissions, salaries, tips, vacation pay, parental pay, sick leave, group health, including health insurance premiums. You can add all that together and say, that's my payroll cost, and I want a loan that's equivalent to 2.5 months of that cost. What is not included in payroll is if you have employees that make more than $100,000, they're not allowed to be in your base payroll cost, which just means that your ceiling on how much loan you get is going to be reduced. You can't count payroll taxes. If your employee lives outside the US, they don't count. And if you're using any of the new provisions under the sick leave and paid family medical leave, then that also would exempt that individual. The terms here, again, it's private lenders. If you have questions on this, you should be talking to your banker primarily on this one. They're going to be inundated with requests, certainly, but that's where and how this process occurs. It's coordinated with the SBA through Section 7, but there are no fees. There's no personal guarantee for the business owner. There's no collateral. There could be a maturity on this of 10 years. The interest rate could vary, but it may not be higher than 4%. Again, the proceeds need to be used to cover payroll. So if you remember, we were talking about how do you determine the amount of money that you can borrow. That was based purely on payroll. And what can I use the proceeds for? I can use it for payments toward payroll or mortgages or rent or utilities. And so basically it's a way to say instead of just flat out giving money, just writing a check like we are to the individual taxpayers, for businesses, how do we determine how to give them a lifeline? And so there's an aspect of this that says, if you're paying these regular bills, that's what we want to be able to do, is get those funds to those individuals. The loan forgiveness, this is the part that, it's sort of a multi-step process, but after you request the money, if you can have it forgiven, obviously that's a nice thing. The borrowers can apply to their lender, and there's going to be some amount of guidance provided about exactly what substantiation is required, but on a tax-free basis, you can have your loan forgiven to the extent that you have qualifying costs during the 8-week period after the loan is originated. So if we think about this, assume that on May 1st, you go for a loan, then you have roughly the month of May and the month of June to look at those various costs, which on the previous slide we talked about, payroll and mortgages and rents and utilities. As long as you continue to spend money toward those costs, there's a very good probability that you'll be able to have, that amount forgiven. The issue, and something to watch out for, is you could have a reduction in how much forgiveness you receive. And there's two things that are monitored on this, and they're both related to head count and compensation. Your FTE, your full-time equivalent count, needs to remain at or above the level it was in the prior year's period. And I'm not 100% confident on exactly how this testing is going to work, but what I'm discerning here is that between February 15th and June 30th becomes your testing period. And you would look at what was my head count in that period last year versus this year. Seasonal employers have some other rules that may come into play. So there's a head count requirement, and there's also a requirement that says if you drop your compensation of your employees by more than 25%, that could also negate the opportunity to have your loan forgiven. There is an opportunity here to, sorry, let me go back here. If you've already furloughed or are intending to furlough people, there's an opportunity where you may be able to bring them back and still not, miss out on this loan forgiveness. Here's an example, two examples. One is for full forgiveness of the loan. The first one, the firms assume they have 100 employees as of February 15th. They laid off 25 of those employees this month, but then they brought back within 30 days of the bill's enactment. And again, enactment means when the president signs. There's no adding numbers of days on this one. It's just when the president signs, it would become that date. And that you maintain that average. So what occurred here, you had 100 last year, or sorry, you had 100 in February, you laid off 25, but then you brought them back within 30 days of the president signing this bill, and therefore you were able to manage to maintain your 100 employees through June 30th. Under that scenario, you would not have any haircut on the loan forgiveness opportunity. Alternatively, on the partial forgiveness, if we look at this example on the bottom, say the same firm had 100 employees in February, they laid off 25 in March, they didn't bring them back, and they had requested and received $1 million loan. Now, because 25% of their employees are no longer with them, 25% of their loan is no longer able to be forgiven, and therefore they would be obligated to pay back the $250,000 over those terms. The $750,000 would be forgiven. So before I jump to this slide, let me just say on this point, I think there's going to be a huge amount of questions around, do I qualify? And probably the biggest question in everybody's mind is, well, is there going to be enough money in that pot? That 349 number that I was talking about, is that going to be enough for all the demand that is going to be there? And how do those priorities impact that? I mean, those are some of the questions that I think everybody's going to be asking, and we don't necessarily know exactly how that will play out, but stay tuned. This is another piece that I just want to touch on, and I thank Ryan Hurst and Nick Boyer, fellow partners at RKL, for preparing this and giving me some notes, because this is not my comfort area, but one of the pieces that was included here is $454 billion for what's called the Exchange Stabilization Fund. Basically what that's doing is the Federal Reserve is going to be supporting a lot of lending through the economy. And so there's a multiplier effect on this, that if you think about, if 10% equity is required in something, the multiplier effect on this could be huge. And in the interest of time, I'm looking at the clock, I'm running out of time here. So I'm going to gloss over this a bit, but this would be a conversation to have with your advisor at RKL or your bank, because maybe you're an employer that says, I don't qualify on the 500 employee rules, so what's in it for me? There's plenty of other discussions and opportunities that may be available, perhaps not as generous, but some other ways to obtain support and aid. I'm going to move on here to the next slide, if I can. So retirement funds, this is a quick one. Basically, the normal deal here is if you're 59 and a half and you pull money from your retirement
you get an early withdrawal 10% penalty. That has been alleviated and removed if you have a coronavirus-related distribution up to $100,000. And there's a lot of different criteria for that, but it's pretty broad. So somebody that has been impacted here in Pennsylvania, especially with all the closures, is likely able to do this. You are going to have income tax on that withdrawal, but you can spread it over 3 years, starting in 2020 as the first year. If you pay it back, you don't need to then pay the income tax. And also, if you want to get a loan, some of the retirement plans, 401ks allow loans. They typically cap out at 50 grand. They've raised that to $100,000 for the first 180 days after this act is in law. The last point, it's sort of hidden down here, but it's an important one. Temporary 1-year waiver permitted on required minimum distributions in 2020. What's the logic here? I think what's going on is because of the pullback in the market, if a retiree needed to, pull money, they don't want to do it while the market values are lower, and therefore they don't need to take their RMDs in 2020. Charitable contributions, I mentioned this one last week. This is an easy one, but basically $300 is allowed as a deduction from your AGI for people that don't even itemize. If you do itemize, the 60% limit on contributions is now up to 100. So you could literally give away your entire AGI in charity and be able to deduct it and not pay tax as a result. C corporations typically had a 10% of taxable income test. That has been raised to 25%. So a variety of changes here to support 501c3s. Here's another new one. If the employer wants to pay student loan debt, they can do that on a tax-free basis up to $5,250. That limit has always been there for tuition paid on the behalf of an employee, but now you can actually also pay debt. You can't stack those together though. The overall limit still is $5,250. There's another employee retention credit. This one, we're in a whole bunch of new definitions and laws, so just bear with me here, but this may have broader applicability here for businesses closed or suspending operations, but still paying their people. You could get a credit one of two ways. And you can read the criteria on whether your business is fully shut down or they remain open. The wages would be considered from March 13th, that infamous Friday the 13th date, until the end of the year, December 31st. How much is my credit? I'm going to jump to this bold slide, or this bold point right here first. In all cases, the amount of qualified wages for each employee for all quarters may not exceed $10,000, which means the most credit that you can get out of this is $5,000 per employee. So just keep that in mind. How do I get that? I get 50% of the qualified wages that I paid to these employees. And there's some rules here that I'm not going to read to you. I put a lot of meat in these slides with the idea that you're going to need to read it and not just hear me say it. So you may want to read through this. And what this is basically saying is if your business has either been shut down or for the smaller companies with less than 100 employees, if quarter over quarter your business is still down, you could potentially claim these credits. Again, the most you can get from any employee is $5,000. So it's not going to totally save the day, but it is some money that is new and available. Another one here, the delay on payment of employer tax and self-employment. So this is now law, or well, assuming this all passes, the CARES Act, this will be the case. 6.2% Social Security tax that the employer pays is not going to have to be funded until December 31st, 21 and December 31st, 22, half and half. Same story for self-employed individuals. So a nice deferral of having to pay. Net operating loss rules. This was one of the things that was raising revenue in the tax reform legislation. They basically undid it. And that's a good thing for companies that are now going to sustain losses. And interestingly, any company that's already, or person who has sustained a loss from 18, 19, or 20 can now carry that back 5 years. If you think about the rate differential, those older years that you could carry back to, potentially as old as 2013, you may have been in a higher tax rate, your company or you personally as an owner. You could get the refund at the rate that was in effect at that time. So this is a nice way to potentially get some more cash into the business to the extent the company's sustaining losses. There's another slide here on a couple other areas. These were revenue raisers in the tax reform legislation that kicked in at the beginning of 18, but they've now undone them. So there were new net business loss limitations under 461L
Those went away. There were limitations on interest deductibility. There's some changes there. They didn't go away, but there's some changes as far as, being able to deduct more interest than would have been otherwise allowed. And qualified improvement property, this is one of those that some of the tax geeks out there have been keeping an eye on. Improvement property, basically by a drafting error, has been stuck at 39-year straight line, and that has now been fixed. And interestingly, it's retroactive to 1/1/18, and you can actually amend a return to go get that money back. My last slide, and then I will turn it over. Just some overall cash flow considerations. Where are we at the moment? And again, this changes so fast. 2019 taxes, if you owe taxes on your 2019 return, you have until July 15th, not April 15th, to pay those. You may want to consider bringing that money back. And the reason for that is my next bullet point, 2020 estimates. At the moment, first quarter estimates have been deferred until July 15th. Second quarter estimates are still due June 15th. So you want to talk about a screwy, screwy situation here. We've got second quarter due prior to first quarter. However, the following bullet point, there's some stuff being talked about in Washington right now that would likely or potentially defer all these payments until October 15th. And that's why I'm saying if you have a large overpayment on your 19 return, you might want to bring that back because you potentially don't need to pay it until October, but we don't know that now. I've already mentioned the payroll tax deferral. There's some new credits that we've talked about. And then the big one, that PPP program, potential to have a lot of income deferred. With that, I'm going to turn it over to Robin Alexander, who's a tax manager with our firm. She's going to be talking more about the Families First Act. And Adam, if you want to, I believe we're set for another polling question, I think. Maybe, maybe not. Take it away, Adam.
Eric, that's the one we moved up at the beginning, so we're good to go. I'm going to pass the ball over. And so, Robin, you have control.
Thanks, Adam. So, yeah, like Eric said, my name is Robin Alexander. I am a manager in the tax services group in the Harrisburg office. So when we were planning topics for this, we briefly threw out the idea of talking about technology. The CARES Act hadn't passed yet through the Senate. There were too many revisions to count. So we thought, technology is really impacting a lot of people. Everyone's experiencing different trials and tribulations as they work from home. And as it's not my topic today, I have to share this funny story that hopefully will make other people feel not so alone in these challenges. But so this morning I got up early, as I usually do if I have to give a presentation, want to make sure I'm ready. And I went and I tried to plug my printer into my computer, and all of a sudden sparks started flying everywhere, and my computer went black. Yeah, so at this point I'm a little bit freaked out. I know I have to give a presentation, all my notes are on my computer, and it won't turn on. So I called some people around 7:30 this morning, and I will say it was so amazing to see my team come together. I had a brand new computer with my hard drive recovered, and my notes even printed out for me by 9:15. So I know a lot of you are struggling with the work from home and the different technology aspects, but it is pretty comforting to be able to see your team members come together in a crisis. And then the second moral of the story is always show up early on the day you have a presentation, just in case you happen to light your computer on fire. So anyways, as I listened to Eric's discussion of the third bill, I can't help but feel like Groundhog's Day. So this time last week, on Wednesday, the Families First Act was passed. And then we had a quick turnaround to Friday to kind of disseminate that information and be able to provide the webinar viewers some content that they could understand. And then the same thing this week with the CARES Act. So Wednesday night, the information came out, and again, prepared the slides and got ready for the presentation today. So with that being said, last week when we presented the Families First Act, we didn't have all the information. We had what was written in the bill, but sort of the implementation side of things and how is this actually going to work hadn't really been brought to the surface yet. So this week, I thought it would be a natural progression kind of to talk about the guidance that the IRS has now had time to put out and some of the other questions that we've seen surrounding the practical implications of the Families First Act. So let me go to the next slide. Adam, for some reason, oh, there we go. Okay, so for those of you who were on our webinar last week, this chart and the one on the next slide are going to look super familiar to you. I really just wanted to bring these up as a reference point. I think they're a great tool. So if you know, your employment status and kind of the parameters around why your employee may be taking one of these leaves. The Families First Act established 2 leaves, which we have the emergency paid sick leave, and then we have the emergency paid family leave provisions. So when you determine how your employee is taking this leave, this chart really nicely lays out the different criteria that will then apply to you. So you can follow the chart and easily get kind of the surface level answers, kind of what we talked about in last week's webinar. So I don't want to spend too much time on this. I really just wanted to bring it up as a reference. I want to take a deeper dive and take this to the next level. How do you implement each of these characteristics that you now need to apply? Okay, so as I've been responding to questions and researching various topics throughout the week, I kept thinking back to those fill-in like blank birthday party invitations that many of us probably remember receiving as a kid. You know, the ones that really clearly state out who, what, when, where, why, how. And I kept thinking, well, wouldn't it be pretty neat if the IRS could just fill out a couple million of these and mail them out to us? But since I know that that's a wish that will never come true, I decided to present our Kale's version of what that birthday party invite might look like. So on this slide, you'll see some of the questions that we've seen and some of the questions that I want to try to address today. So who is impacted by the Families First Act? Who's impacted by, also known as HR 6201? What expenses qualify for this refundable tax credit that you keep hearing about? When should implementation occur? And how can employers even afford this? So first, let's start with who is impacted by this bill. I'm sure you've heard over and over again that do you have less than 500 employees? Okay, then yes, this impacts you. But we found that this application isn't quite so straightforward. So to understand this further, let's first talk about what is an employee. So an employee is any full and part-time employees, but then to layer on top of that, it also includes employees on leave, temporary employees jointly owned by by 2 or more employers, and day labor supplied by a temporary agency. So this is not to be confused with independent contractors. They will not be counted towards this. So if you're issuing a W-2, it's safe to say they're an employee, whereas an independent contractor, you're not. Okay, so that's all good and well. You count up all those people, and let's say you come up with 503 people. You say, okay, well, I'm not impacted by this. I don't fall under the threshold. Well, what if you have fluctuations in your labor force, which is happening to a lot of people with layoffs and other unintended consequences? So you start with 503 and tomorrow you lose 4 employees and you're down to 499. Well, then do you qualify? At what point in time do you qualify under the 500 employees? So that's become kind of an issue for some employees that we've seen. And pursuant to the guidance, an employer must comply if at the time an employee seeks to take the applicable leave that we've talked about, the employer has fewer than 500 employees. So in other words, an employer may have more than 500 employees today, or even on the effective date that we're going to talk about in a couple of slides. But if they subsequently reduce their workforce to less than 500 employees, and then any employee wants to take the eligible leave, that's when the employer will need to comply with the provisions of the bill. So it's really on the day of the leave, how many employees do you have? So it makes it a little complicated because it does have an ebb and flow to it. And while this already seems complicated enough, there's an additional layer with the aggregation rules. So let's say you have a business and you have related business entities. How do you treat those for purposes of this 500 employee count? Is it all one, or are they separate employers? So there are 2 tests that we have to worry about, and that is the joint employer test under FLSA and the integrated employer test under FMLA. So these 2 tests aren't new. Like I said, they're under FMLA and FLSA. So I'm not going to go into great detail. They already exist. They're not something that came out with the Families First Act, but I did want to just point out that they're out there and that they should be applied if you have this situation. Okay, so once you've completed your counts, let's say you have less than 500 employees, you determine that you must comply. Then you need to figure out, do I have eligible employees that can take this leave? So the two types of leave, again, the paid sick and the paid family leave. And you can see on this slide the different requirements that make an employee eligible for this leave. And we discussed these in last week's webinar as well. So really what I want to point out here is some of the terms that have kind of tripped people up and seem straightforward on the surface, but can be kind of ambiguous. So number 3, for providing care for a child whose school or daycare has been closed, for the purposes of this and the one in the paid family leave, and it's only for providing this care because of school closures. If someone's sick, that's different. This child must be a son or a daughter. So it can't be a niece or a nephew. It can't be the neighbor's child. Unfortunately, it must be the employee's own son or daughter. And the other thing I wanted to point out, quarantining order from government. So that portion has raised a lot of questions for many people. So if there's an order out from the government, such as the one in Pennsylvania, that only allows essential employees to go to work, that would qualify. If you're considered non-essential and so you can't report to your office and you can't do your work from home, then you would be considered under the quarantining order from the government. So those are a couple of things I just kind of want to highlight because I know that they have caused a few issues. So as we move on, so you determine that you have to pay this leave. You're an eligible employer. You have eligible employees. So you're paying all these costs that you've heard count towards the credit, but what costs actually count towards this refundable tax credit that you keep hearing about? So the total credit is made up of the wages that you're paying under the leave, plus the 1.45% of employer Medicare tax related to these wages, and then additionally, the allocable health plan costs. So what does allocable health plan costs mean? So unless the Secretary of Treasury provides different rules, the allocation of health plan costs currently stand that they may be made pro rata among covered employees. And then with respect to each individual employee, these costs can then be made pro rata to the periods of required sick leave or family medical leave. So I know a lot of people have been asking this question, how do I allocate it? That's really the only guidance we have, is that it should be made pro rata. The second thing I want to mention on this slide, the 1.45% of employer Medicare tax. So we've had some questions surrounding this as well. So the total credit that you're calculating here, it's offsetting the 6.2% of employer Social Security tax, right? So, and we stated that in the slides earlier in the chart. It only offsets the employer Social Security tax. What gets a little bit sticky in the bill is that they start mentioning Medicare. And the reason they're mentioning the Medicare is because that's what's factoring into the total credit. So it becomes a cost that is added into the total credit, which then offsets your employer Social Security tax. Ultimately, this credit is refundable, so you're still receiving essentially a credit for the amounts you're paying. It's just not, when you go to file your actual payroll taxes, it's not going to be a credit directly against the Medicare tax. You'll have to remit it. Now, I say that, but wait for a couple of slides later and we'll talk through this because it becomes a little bit different in this at this point in time. Also, I do want to mention, if you're self-employed, it will offset your income tax instead of obviously the employer Social Security tax. All right, so when should implementation take place? So originally in our first webinar, we talked about a date of, oh, sorry, my computer's acting up. Okay, ironically, right? So when should implementation take place? So we talked about an effective date of April 2nd in our last webinar, and probably in a lot of correspondence you've seen. However, on Tuesday, the Department of Labor advanced the effective date to be April 1st. So now the effective date is officially April 1st. I'm guessing they did this to kind of go in coincidence with the month because payroll typically runs with the month. So again, this will not be retroactive. So anything that has happened before April 1st does not have any implications on the bill. And I realize that this is somewhat tricky considering many people's daily lives have been impacted by coronavirus for now weeks. Like Eric said, we don't even know what day it is anymore. But if they've been on leave already, unfortunately that doesn't count, and it can't count towards the credit. Now, with that being said, there is a provision in the bill that provides that an employer may, and I want to emphasize the may, you're not required to provide this, but you may require the first 10 days to be unpaid leave. Now, with that being said, if you do utilize the full 10 days, again, that starts on April 1st. It doesn't start with what has already happened. And if you do offer these, or not offer, if you do require the first 10 days to be unpaid leave, you must offer to your employee an election to substitute any of their accrued vacation or their personal leave or any of their sick leave instead of this unpaid leave. We also want to just recommend to people that you're reaching out to contact your payroll providers immediately. I think there's going to be a lot of work around just tracking all of this information and making sure it's tracked appropriately. Also discussing any retirement plan implications and stuff like that ahead of time. I think it's really going to serve you well. All right, so I saved the biggest question for last. I'm sure this is on everyone's mind. How can employers afford to implement this, right? So the IRS, this is where they've had some time to respond, and they came up with some hopefully good solutions to ease the burden of this bill on employers. So the IRS has said that eligible employers who have paid leave under the Families First Act will be able to retain an amount equal to the payroll taxes that they provide under leave. So let's say you calculate this credit, and then what you would do is you'd say, okay, I can now retain taxes up to this credit. So what taxes are they allowing you to retain? They're letting you retain your federal income taxes withheld, the employee and employer portion of Medicare and Social Security. So like I said earlier, this becomes a little sticky because what we said is that this credit only offsets Social Security. What they're ultimately trying to do here is keep as much cash in the hands of the taxpayers so they can continue to employ people and then continue to pay the wages under this leave. And so I'm sure they're coming up with some sort of tracking mechanism behind the scenes, but ultimately that's what they're trying to do is keep the cash available to you. So what happens if you calculate your credit and the taxes you would have deposited are more? Well, then you still need to remit the difference. And on the flip side, if you calculate your credits and they're higher than what you would have deposited, the IRS has come up with an accelerated IRS payment plan. The forms were supposed to be released, I think, today or maybe early next week. Their plan is to be able to process these forms in less than 2 weeks. So there'll be more information to come on that, but we know that the process is being in place. We just don't know kind of the details surrounding it. Lastly, the IRS is offering relief to small businesses with fewer than 50 employees. So they will be eligible for an exemption from the leave requirements where the leave would jeopardize the ability of the business to continue. And I'm sure you've heard this before, but one caveat that I do want to note on this is the exemption actually only applies to leave relating to school closings or childcare unavailability. So any of the other criteria that we talked about that make an employee eligible for leave, those would not meet this exemption, and they would still need to comply. So we're still waiting on the Department of Labor to provide guidance on this provision, but hopefully, again, as we said with everything, time is only going to be on our side here. We're only going to get more information as these agencies have more and more time to respond. So in closing, I hope that I've helped to answer some of your questions and clear up any ambiguity that's out there. I hope I haven't raised any additional questions, but I'm sure I have. So if you have any additional questions, please feel free to reach out and we'll be happy to help you in any way that we can. So I think I'm going to turn it over now to Adam. Do we have a polling question?
Thanks, Robin. And we do have a polling question. I'm going to pull the second polling question up right now. And to be mindful of time, we're going to leave this open. And Stephanie, if you don't mind that we leave it open while we kick off your part. Our second polling question is, does your business fall into the life-sustaining category? You can answer yes or no. And Stephanie, if you're ready, I'm going to turn the control over to you.
Thank you, Adam. Well, I have to say that I end my day with a gratitude journal, and tonight's entry is definitely going to include that I'm grateful that my day did not start like Robin's did. And secondly, I am going to also note that I'm thankful I found a quiet spot in my house. My neighbor just started mowing his grass, so if you hear a dog barking in the background or a lawnmower, I apologize. I did relocate to my unfinished section of my basement, so I'm tucked in here nicely between my water heater and my water softener. So the things that you have to do when you work from home, I'm sure I'm not alone in this. So I'm going to cover some of the frequently asked questions that we've been receiving this week. So I'm going to start with the Department of Labor's poster that came out. On March 25th, the Department of Labor's Wage and Hour Division released the poster that requires qualified businesses to post to inform their workforce of their rights under the Families First Coronavirus Response Act. That becomes effective on April 1st. You can find a copy of this poster by visiting the Department of Labor's website, or you can visit RKL's resource page on our website. It is also linked there. So if half your workforce is telecommuting, where do you post the employee rights poster? So the employee notice for the act must be placed in a visible location at your company. So examples would be currently like where you post your current labor law notices, if you have a lunchroom or a break room where everybody in your business will visit and go through, that is a popular location. If you have multiple locations with multiple floors and people might not transfer between floors in your office, you may want to consider posting in multiple locations if necessary, just to ensure that your workforce has access to the notice. For employees who are telecommuting, you can either email the notice, or for those who don't have an email address, you may have to mail a copy. You can mail a hard copy to their home address. You may also post the notice on your intranet site, as well as your external company website, and notify your employees where they can find it. It's important to note as well that you cannot put the federal notice in a binder. They must be visible to your employees. And also, if you have reduced some of your workforce up to this point, you're not required to share the notice with those employees who are currently furloughed or laid off. However, you do need to share the notice with an employee that you may have hired in the midst of all of this. Back here. There we go. Okay, so if you're a small business owner, you may be wondering if you're required to post the employee rights notice, and the answer is yes. All employers that are covered under the Families First Coronavirus Response Act are required to post this notice. There is an additional guidance at this time that provides exemptions for employers with fewer than 25 employees. And in order to stay up to date on the latest guidance, you can consider signing up for alerts on the Wage and Hour Division's website. So you may be wondering about businesses that closed prior to the act being signed. Are your employees eligible for the paid benefit? If you're an employer that closed business operations prior to the act becoming effective, your employees do not qualify for the paid leave. However, they are still eligible to file for those unemployment benefits. Oops, I think we skipped ahead. Okay, next slide. Our business may have to make furlough, layoff, or reduction in force decisions. And how do you go about deciding how to make those determinations? So as an employer, you should carefully consider and document the selection criteria that you're going to use for your layoff. If you're unionized, you'll need to take additional measures to ensure that you don't violate an existing collective bargaining agreement as well. So some factors that you can use to determine how your process, you can use tenure, seniority, employee status, performance, and skills. You can consider criteria ranking from those options listed to further evaluate additional criteria, such as, weigh in the attendance, their work quality, experience level, skills, etc. Being sure to document your process so you can be mindful through your thought process, and you can report back to that if anybody has any concerns about how you came to the list. You have something that supports your decision-making process. Transparency is required when communicating to the employees about the selection criteria. It's important to underscore to your workforce that the layoff isn't about the employee themselves, but rather the position that they're in. Am I required to pay employees if I have to close my business midweek? So non-exempt employees are those that are eligible for overtime and are paid at least minimum wage. The non-exempt employees are paid for actual hours worked. So if you had a non-exempt employee that worked 4 hours on the day that you closed your business, you are required to pay them for those 4 hours that they actually worked. If you had happened to close like the night before and they didn't report to work the next day or for the remainder of the week, you don't need to pay them for the rest of those days in the week. However, a note of caution, be sure to check with your local state laws for requirements if you had to send employees home in the middle of their work day. There are some provisions that you might need to follow with regard to that. And for those employees who are classified as exempt, they are usually entitled to receive their full salary for the work week they performed, despite the number of hours that they actually worked. So if they worked one day in the work week leading up to the closure, you may need to pay them for their entire week salary. Are my employees eligible for unemployment compensation? So employees are eligible eligible for unemployment compensation due to the following conditions. If the company temporarily closes or goes out of business because of COVID-19, employees' hours are reduced as a result of COVID-19, the employee has been instructed to quarantine or self-isolate, or they live or work in a state that is under a government mitigation effort, or lastly, if the employer requested the employee not report to work because the employer feels the employee might get or spread COVID-19. So employers who are temporarily closed because of the coronavirus will be granted respite from charges and there will not be any increases to their unemployment compensation tax. Furthermore, the 1 week waiting period to receive unemployment compensation benefits has been suspended, and employees do not need to prove they have applied or searched for a new job to maintain their unemployment compensation benefits under this current situation. So what is my responsibility as the employer with regard to informing my employees about unemployment compensation? Employers in all 50 states are required to notify their employees of the availability to apply for unemployment compensation upon separation, regardless of the reason for the separation. Additionally, you are required to provide the employee with information showing at least 2 ways that the employee can file for unemployment compensation. So for example, providing them with the web address or the phone number of the local unemployment office. What is the Coronavirus Aid, Relief, and Economic Security Act, also referred to as the CARES Act, and what does it mean for unemployment compensation? So this bill, unanimously approved by the Senate, now awaits the response from the House of Representatives, not only provides the various tax relief and loan provisions to assist businesses impacted by coronavirus, as Eric mentioned earlier in our webinar, but it also includes an expansion to unemployment benefits for individuals affected by the pandemic. So a few notable highlights from the bill is parts of the CARES Act establishes a temporary pandemic unemployment assistance program through the end of the calendar year that includes individuals not otherwise eligible, such as those who may be self-employed or independent contractors, just to name a couple. It increases unemployment compensation by an additional $600 per week per person for up to 4 months, as well as extends benefits from 26 weeks in most states to 39 weeks, and benefits are eligible beginning January 27th, 2020 and ends on December 31st, 2020. Additionally, employed workers who are generally eligible for roughly half of their weekly earnings for up to that 39 weeks may receive an additional $600 a week as well. So lastly, can I require employees to provide documentation to prove that their leave was due to the coronavirus? So some laws already restrict employers from asking employees for supporting documentation. So be sure you understand your state and local sick leave laws before you proceed. Additionally, the CDC has provided interim guidance that advises employers to not require documentation from employees at this time who are sick with the coronavirus. The reason for that interim guidance is because healthcare provider offices and medical facilities are under intense pressure right now, and they may be too busy to provide the return to work notice. And I also want to note that if you receive any documentation to your employees regarding their illness or their eligibility to return to work, if they voluntarily provide that, you must keep that information confidential, and it cannot be maintained in their main personnel file. The documentation must be separate. So now that you have this information, how can your advisors help you? If you have additional questions or need guidance, contact your RKL partner or engagement team. RKL has expertise in a broad range of financially oriented disciplines, as well as human resources, wealth management, cybersecurity, financial management, IT, risk management, just to name a few. So consider consulting your attorney regarding employment or contract matters. You can consult your banker regarding loan options, enhanced line of credit, or modifying loan terms. Your insurance agent can be a helpful resource to navigate health policies or policies pertaining to interruptions to your business. And lastly, small business administration and economic development centers such as SBA Eastern PA district branches or local economic development centers are also a valuable resource. Before we end our presentation here, we're going to take our last polling question. Adam, you have the control.
Thanks, Stephanie. And I'm going to populate the last polling question. I know we are over on time. We said it would be done by noon. So I'm going to launch that polling question now. It should be visible on your screen currently. And since we're being mindful of time, once you do vote, and we are past that 1 hour mark for those requiring CPE for this call, once you have voted, and if you do need to drop, we understand. But feel free to stay on if you don't need to drop, because we have, I think, 1 or 2 more slides left. So actually, while that poll's going, Stephanie, am I turning it back over to you for the next slide?
Okay.
Go ahead.
All right, so thank you for your time today. We hope that you found this webinar helpful. You can visit RKL's Coronavirus Resource Center on our website for additional resources, or you may reach out to any of the presenters from the webinar today if you have questions. Thank you very much and have a great day.
At this time, I will end the recording for today's call. I will leave the webinar open for another 2 minutes so people can continue to voting. Thank you for joining us, and we hope to see you next week.